Data released over the European session. What's caught your eye this morning?
Well, I mean, a couple of very interesting figures from Spain. We've talked about how Spain is, something of the dark horse of European economies, and it seems to be leading the recovery. And here's further proof of that in terms of GDP data for Q1. And here we're looking at a year-on-year read, so the first quarter 2015 over the first quarter 2014, and we saw growth of 2.7%. Now, the market was looking for 2.6%, so it's not a complete surprise, but it's certainly ahead of that, and again, a better read than we saw in the prior quarter. So small increment, but it's heading in the right direction.
Yep.
2 quarters of.
Take that in conjunction with the retail sales.
Yeah, well, absolutely. That came out today as well for April. And again, we look here at the year-on-year data, up 4% versus the 2.6% forecast. So that's very impressive. No doubt there's some seasonality there with the way Easter falls, etc., etc.
Yep.
But still, it's moving in the right direction, and plenty of other economies around Europe would like to be seeing 4% growth in retail sales year on year, as indeed would the Japanese, who published their own retail sales figures for April today, and a very poor reading they made too, up 0.4% month on month versus the forecast of plus 1.1%. Don't be fooled too much by the year-on-year figure, which we haven't showed here, but which shows a 5% growth, because don't forget that spending fell off a cliff it spiked dramatically and then fell off a cliff either side of the introduction of the sales tax in April 2014.
Understood.
And staying in Asia,
Shanghai down 6.5%.
Yep, a big move, although let's not forget they're up 50% year to date, so they've got plenty of headroom. But nonetheless, it was a sharp sell-off, and it all started basically when the largest Chinese sovereign wealth fund started selling off banking stocks. So volatile on the way up, and no doubt they'll be equally volatile on the way down, these Shanghai listed stocks.
Understood.